Yield back.
Thank you. Gentleman from New Mexico, Mr. Pearce, for 5 minutes.
Thank you, Mr. Chairman. I think I would go to Mr. Randazzo first. When we consider the preferred stocks that were basically allowed to not be exercised, do you know what the process was in which these were suspended? Where the banks are being encouraged to buy the stock, isn't that correct? Do you know anything about that? You know anything about the process?
In 2008, when the
in other words, prior to the government taking conservatorship, banks were encouraged to buy these. And if it's not something you're familiar with, you can yield to Mr. Pollack. I think he might have one.
I think Mr. Pollack, Mr. Clyburn can speak more to this.
Check.
Thanks, Congressman. I'd be glad to address that. By the regulatory capital treatment, banks were certainly given an incentive to own this equity on a highly leveraged basis. And when the GSEs were put into conservatorship, the dividends on the preferred stock were suspended. That strikes me as an appropriate thing to do under the circumstances. But the valuation then of the stocks, looking forward to how much could be recovered ever, of course, was extremely low, and the write-offs were very high, troubled many banks, and it put several banks into failure. The fault, as I see it, is the design of the system in the beginning, which encouraged the banking system running on what you might think of as double dipping of the government guarantee. That is to say, you took government guaranteed deposits and used them to leverage investments in equity of the GSE. That, in my view, was a big mistake.
The term preferred stock means basically just that. Were there lower level creditors who were given their value while preferred stockholders lost theirs?
No, there were common shareholders. Of course, there still are legally common shareholders who saw the price of their stock go down more than 99% to pennies on a share. Then you have the preferred. Above the preferred, you have the subordinated debt, which I mentioned in my testimony, which has been protected, and that is something I believe we need to fix going forward, that the subordinated debt holders should share in the realization of the risks which they knowingly undertook buying subordinated debt.
Ms. Wardell, you had mentioned on page 17 that we need to bring people and families and homes back into the conversation about housing finance reform. Would you kind of elaborate on that? In other words, when I hear that, I'm not saying that everybody who took out a subprime mortgage knew that they could never pay a payment on it and they were being encouraged into it, but also they were willing participants. So when I hear that, I kind of hear that we need some personal accountability and responsibility. Is that what you intended in your comment, or did you have a different direction? I'd like you to expand on that just a bit.
Sure. That was not what I intended by my comment, but I certainly agree with that.
You would agree with it that
I certainly agree that individuals who take out loans should have the ability to repay them, and I think we have a responsibility as individuals and as a society to ensure that lenders are making loans available to people who have the ability to repay them. Some of them were lured or tricked through predatory practices into taking in obligations they didn't have the capacity to pay, and others were simply part of a crowd, that kind of a crazy frenzy. But what I had in mind by my comment was that I think there are serious economic consequences for American families if we don't care about the stability of the housing market and the role that the housing market plays in creating economic opportunity and mobility for families.
Okay, and that's fair enough as long as we take both sides of the equation. I mean, that seems reasonable enough. Mr. Calabria, you mentioned on page, I think it's 3, that you do not think there's much, that we've experienced most of the risk in the financial sector, that if we start bringing accountability in the system, there's not much downside risk. Am I reading that correct?
For starters, yes, I believe we are past the point where you could say we are in a financial panic. And my point about, I think it is time to start imposing losses on creditors, Now, the concern about, I think, during the crisis that Treasury had was there would be a run in these markets. And of course, the bazooka that Secretary Paulson was given to back up Freddie and Fannie was to calm those markets and provide liquidity. We're past that point. We're at a point where I think we can start thinking about where should we allocate the losses. In my opinion, they should be allocated on creditors. I do believe that creditors can bear those losses. As I indicated in my testimony, I think creditors would get at least 94, 95 cents on the dollar, which if the Chinese central bank is not happy with that, they can go invest somewhere else, in my opinion.
So all the instruments of risk, the MBS, CDOs, whatever you're talking about, those basically reside, you're saying that a large enough percent now resides in the U.S. government to where there's not much left out there. We've bought most of the bad assets, is that right?
There's still a number of bad assets. The concern is really if you start with the observation that 80% of the funding for Freddie and Fannie comes from the rest of the U.S. financial services system. So about $1 trillion of that, a little more than $1.5 trillion of that's in the commercial banking system. So we do need to be concerned that if you impose losses such as were imposed on the preferred shares, what would happen to the banking system? Now, the FDIC has looked at this, and the number of banks that would actually fail is quite small. You have other things. The money market mutual fund system holds about $1 trillion in unsecured debt. We have to remember the priorities would be preferred shareholders get hit, subordinated debt would essentially get wiped out, and the unsecured debt would take a significant haircut. The MBS would largely, in my opinion, be whole. That would pose significant risk, I think, to the money market mutual fund. You'd see dozens probably break the buck. We still, post-crisis, do not have a solution, in my opinion, to the issue of money market mutual funds, even post-reserves primary. So I think that issue needs to be directly addressed, but I think we can allocate those losses.
And
Thank you, Mr. Chairman.
thank you. Gentleman